What's good, YouTube? Welcome back to a chart review. I'm not gonna lie, this weekend I was not very motivated to do stuff. I wasn't very I don't know. I was just like in a little funk this weekend. But anyways, we're back with it. We're back with the chart review. And Friday we had a very nice market maker sell model that I didn't catch and I wasn't a part of. But looking back, it was very clean, and literally all you got to do is simplify market maker models. And that's what I kind of want to do today, is simplify what is a market maker model. So if we know what a market maker model is, we know that the market is always moving from internal range liquidity to external range liquidity, or we are moving from external range liquidity to internal range liquidity. Now, what is internal range liquidity? Internal range liquidity is liquidity inside a range. So say we have a range like this. Where does liquidity form inside of this range? We know that liquidity forms inside this range in terms of fair value gaps. So fair value gap is an internal range liquidity. It's a box. It's a box. And we know that external range liquidity rests beneath lows externally. What is that? A line. So we know if we take external range liquidity and if we show some willingness to go higher, then we are going to head to internal range liquidity. We are going from external range liquidity, the line here, a PD array, to internal range liquidity. And that's pretty much what a market model is. And over the weekend, I kind of just dumbed it down a little bit, because I feel like as a trader, and especially trading ICT concepts, you overcomplicate it. We overcomplicate things. And I will say that's definitely what I've been doing and what I've been trying to get better at. And so let's look at this market maker model we had on Friday, which is the perfect prime example of internal range liquidity to external range liquidity. If we just look at this, we are going from internal range liquidity to external range liquidity, which rests at this low. And I feel like as a trader, you just need to simplify it. You need to break it down. Internal range, form of a fair value gap, to external range. And when is a market maker model valid? What are we looking to possibly confirm a market maker model? For me, I like to use SMTs as a big point and reasons for price to retrace. As we can see here, we end up having an SMT at the highs. On NQ, we failed to take this high. On ES, we actually took this high. So this shows us price is probably going to reverse here. And if we zoom in, we are bouncing off of a 1 hour fair value gap. And if we just look at structure, what have we been doing this whole morning? We have been generating liquidity. We also did this another day. I'm not going to go into too much, but we're generating liquidity in these overnight sessions. Notice how this is low resistance liquidity. Why is it low resistance liquidity? Because we put in a low, we don't take it. We put in a low, we don't take it. We put in a low. Like, we are failing to take lows. And that's what low resistance liquidity is. To then, around open, we have this Judas swing to then run all of this low resistance liquidity in the matter of, we'll say, how long is this? We run all of this in 3 hours. How long are we building this move? So we're building this move for 7 hours, and then we're running it all in 3 hours. That is low resistance liquidity. So that's what we're doing here. We're just generating liquidity to then have a smart money reversal in an area in which we expect to manipulate. We expect to reject, not manipulate. Look at this. 1 hour fair value gap, PD array. We know that price moves from internal range liquidity to external range liquidity. So just by looking at this, we have an SMT at the highs, prices within this 1 hour fair value gap, and then this is when we can drop down. We don't know. We're not just gonna say, oh, hey, price is gonna reverse here. We have the SMT that gives us the confirmation, but what could we be looking for? Change in state of delivery. Right here, we have that change in state of delivery on the 5 minute. Then we have an internal stop rate here. This would have been your low risk entry. We have an internal stop rate here. We also have this breaker now. Because what is a change in state of delivery? A change in state of delivery is confirming and is activating this breaker. Notice we have a low, high, lower low. This now becomes your breaker on the 5 minute. And you can pair up that breaker with this fair value gap in the 1 hour fair value. Like, this was a good, like, looking back, this trade setup was very good. You have like pretty much everything you would need. We're rejecting off of a higher time frame imbalance. We have an SMT that confirms that smart money reversal. We know smart money is selling here, SMT. Then we get that change of state of delivery on the 5 minute. Then we confirm this breaker. Then we have a fair value gap. Then we have an internal stop rate here. And we have low resistance liquidity. If we look at the time, where is just some low hanging fruit you could target? London low. And the thing about this is that, like, looking back, this is just beneficial to us because, like, we can look back at this and we just say, hey, this happened today, so we have that dialed in, and we know that this happened today, so therefore we have more data to put into your journal. And, like, if you miss out on a setup, like I missed out on this setup too, but there's nothing you can do about it. You can't look back and you can't change the fact that you missed out on a setup. So we came down, breaker, fair value gap, internal stop rate, displacement lower. We have London low below us, low resistance liquidity. Let's zoom in. Because I feel like as a trader, bro, like, I've been just way too zoomed in recently, and I don't know what I need, but the 1 minute is not going to solve your problems. The 1 minute is not going to give you even the best entry. Like, you can be a profitable trader on the 15 minute, but I just like to use the 1 minute because it gives you the best risk. And I think that's what traders, like, especially like me, I feel like I get induced with the 1 minute. So we come out, we have the internal stop rate, we have the 5 minute breaker, 5 minute fair value gap here. That would have been your first entry on the 5 minute. Then we zoom down a little bit lower, we get displacement lower. And then actually in my live stream, I was looking to enter here off of this fair value gap, off of this breaker, low, high, lower, low, off of this order block as well. This, in my opinion, would have been a very nice entry as well. Off of that fair value gap, taking it to London low. And we also have, you could have left runners all the way down here to the external draw, which for me, I'm just taking what I'm confident in. I know that price, like if we're in a market maker sell model, this is a clear market maker sell model. I know that price is pretty confident that we're going to London low. Like, I don't need to catch the low all the way down here, which is what we ended up targeting. But let's draw in standard deviation as well. Standard deviation is just the last manipulation leg. As we can see, price ends up lining up perfectly, -2 to 2.5. That's that low you're looking for. And that's exactly where we bounced today. And I'm going to get into my bias a little bit quick here. But basically, I'm pretty bullish right now. I'm pretty bullish. But basically, standard deviation lines up with that sell side. That's perfect. There actually was another nice entry here that I actually kind of liked. I'm going to kind of bring this up a little bit. But basically, whenever we are in a market maker sell model, you can use time frames, or you can use something like this, like a fib, to tell you where. I don't use this too much, but I've just kind of been researching this. But basically, from 0 to 0.25, this is when your low risk entry will probably occur, which happened up here. And then basically from 0.5 to 0.75 is where that silver bullet is going to line up. That silver bullet. With silver bullet's just the second stage of distribution. And that's what we had here. We had an SMT confirm that. Then we get displacement lower. Then we have this 5 minute breaker. This would have been an amazing second entry. We get that retracement up into equilibrium of this range. Into equilibrium. Also OTE of this leg. Is it OTE? I'm assuming it is. Yeah, OTE of this price leg. We barely tap OTE. To then displacement lower. breaker, fair value gap, change in state of delivery. What is change in state of delivery? Change in state of delivery is when we close below these bullish candles. So now this becomes the order block. This up closing candle range here becomes the order block, and this becomes the breaker. That's what the change in state of delivery is. Notice how we close below this. This now becomes the order block. This now becomes the breaker. I don't know why I just did that. Breaker. And now this is when you can look to enter, and we just get a nice sell to this low here. Ended up being a fantastic market maker sell model. Pretty much the whole day we just sold off. And I'm kind of disappointed because I was looking to enter here. I hesitated. I didn't take it because I was too zoomed in. And then also here, I was looking to, we're not going to go over my flaws, but basically I was looking at like how we have SMT at the lows. SMTs do not really matter unless there's higher time frame context. Like, you really want to be looking at the higher time frame SMTs. You don't want to be looking at the little 1 minute, 5 minute SMTs. The only time in which you can look at the 1 minute SMTs, those internal SMTs, are when you have higher time frame context. Same with the 1 minute. The 1 minute doesn't mean anything. The 1 minute shouldn't even be the time frame that you spend your most time on, which is what I definitely want to improve on as a trader. And okay, let's go into my bias going into the next day, going into the week. So very nice and very efficient market maker sell model, SMT at highs. We're rejecting off of not just any random area, an area in which we already expect to reject after we have been building low resistance liquidity overnight, to then have this SMT confirming that smart money reversal, to then have your low risk entry, to then have your second stage of distribution, your first stage of distribution here, your second stage of redistribution there. Overall, fantastic market maker sell model. Fantastic market maker sell model, in my opinion. We're going from internal range liquidity to external range liquidity. So that is what I'm looking at. That is what I saw. I didn't capitalize on it, but there's always ways you can improve as a trader. Like, you're not going to catch every single fluctuation within the market. And if we look at what we have here, if we zoom out to the daily time frame on NQ, we now have completed sell side of the curve, which I'm anticipating lower prices throughout the rest of the year. But for this week, I'm actually kind of bullish. We now have completed sell side of the curve, completed sell side of the delivery. We've had displacement through lows, and we have created bearish fair value gaps on the daily chart. We've now came into an area. We have a daily order block here. We also have a daily imbalance here. And we have now taken this low. This looks pretty bearish, but I want to see how we react off this level. If we zoom into internal structure, that last manipulation move from this high to this low, if we mark out standard deviation, -2 to 2.5, anytime that we respect -2 to 2.5, I'm expecting to see a retracement into equilibrium of the previous price leg. I know that will probably happen overnight. So overnight session, I'm looking for something like this, to where we kind of retrace back in equilibrium, or we can do something like this where we taper off like this, maybe fill in this new week opening gap to then get bought up to equilibrium. But I'm pretty bullish just for now, just based off this structure, as well as we have an SMT at the lows here. ES has not taken this low, so this could be a possible sign of reversal. ES has failed to take this low. We're bouncing off of a daily order block, a daily fair value gap. Internally, we have met our standard deviation projections, and we have now taken external range liquidity. External range liquidity. Anytime we take external range liquidity, we're looking for possibly internal range liquidity. We now have daily fair value gaps here. We now have two daily fair value gaps that I'm looking at. We have this daily fair value gap here, and then we also have this daily fair value gap here, kind of. It's a very smaller imbalance, but I'm looking for these to possibly be the draws going into the next week. But I'm going to be very patient. I'm definitely expecting consolidation Monday. Let's look at news. I believe that there is no red folder news. Yeah. Oh, no, that's Sunday. Yeah, Monday, we don't have any red folder news. What can we anticipate Monday? I don't really look at weekly profiles, but this week I have been looking at weekly profiles, and no red folder news Monday. I am expecting Monday lower probability action because we've just had a giant sell-off. So this is not a point to where I'm coming to the market, I'm like, hey, I'm going to pass my funding account today. Or, hey, I'm going to make money today. No, today or tomorrow, I'm not going to be in a money-making mindset at all. I'm going to be in a capital preservation mindset. If the opportunity is there, I might look to take it. But if the opportunity is not there, I won't even look to take it. Tomorrow, no red folder news. On a Monday, we can expect to be lower probability. Tomorrow, honestly, like, if you don't even show up to the charts tomorrow, I wouldn't even blame you. Like, tomorrow, I'm not really expecting anything. So, basically, I'm expecting something like this to where we have Monday consolidation. Then we could possibly have Tuesday low of week to then come back and hunt this daily fair value gap. What else do we have here? We have low resistance, or we have stacked equal highs within this daily fair value gap. We have stacked equal highs here, relative equal highs within this daily fair value gap. We know that price is likely going to hunt this. We have now taken external range liquidity, so we could be looking for possibly buy side of this curve. Maybe this week we might see something like this play out, but maybe within the upcoming next weeks. But I'm going to be pretty bullish coming into next week. And let's look. Do we have any other news? Wednesday we don't have any red folder news. Thursday we have GDP and then pending home sales. Okay. And then Friday we have some red folder news. So it's kind of like I'm looking for this. I'm expecting this to play out because if we're looking at this, draw on liquidity has already been met. There doesn't make much sense for price to really go much lower. But if price shows us that we want to go lower, I'm not going to be overly bullish. We just had a huge sell-off. But I'm anticipating to probably see this fair value gap us draw into. We don't have to at all, though. We also have a daily fair value gap here that we can draw into as well. So I'm looking for something like this. It doesn't necessarily have to happen. I don't need to predict the week. We don't need to predict the week as well. We're just here and we're just going to see what price is doing and then anticipate things like that. I think we're gonna go higher this week. Me too. What's good, Charles? What's good, Manny? What's good, VA? How old are you? I'm 19. I just turned 19. You're awesome. I appreciate it. How do we get the new week gap? The new week opening gap is just the gap between Friday's closing price to Sunday's opening price. So there's no trading from Friday when market closes to Sunday at 6 p.m. Eastern time. So this is a gap. There is technically no liquidity resting within here. I don't really use new week opening gaps too much, but they're a confluence that you have. I also have an indicator for it. I need to clean up the indicator because it's not the cleanest, as you guys can see. I need to change it. I'll probably do that later tonight. But the indicator that you can use is new week NWOG or NDOG by Kryptonite. It's very useful, and you can change your settings to make it a little bit prettier. I might just leave new week opening gaps in here. I might just turn off new day opening gaps. But yeah, that's the indicator that I use. It's pretty helpful. So going into next week, going to be pretty kind of bullish because we have an SMT at the lows. We've now reached the external range liquidity, and we also have an SMT at the lows here with ES. So I'm kind of bullish. I'm expecting to see some form of reversal, but I want to see a change in state of delivery. I want to see something like this to then head higher up to these highs we have stacked up here. What's good? Lataro? I don't know if I say that right. How do you feel about trading Wednesday with only red? I mean, it all depends on what the market shows us. But Wednesday, we don't have any red folder news. I would be a little bit cautious. Wednesday, we normally have red folder news, but obviously the market's still going to move, so there's still going to be a trade you possibly could take, but you got to position yourself accordingly, you know? I think we have a bullish week forming a weekly SEBI, sell side imbalance, buy side inefficiency. I think we have a bullish week forming a weekly SEBI. Yeah, I'm anticipating us to form some form of fair value gap here on the weekly time frame. This is what I'm anticipating. Yeah, I don't really have much else. That's kind of Friday's action. I thought Friday's action was clean. Let's kind of just go over the setups that I kind of saw within the week. So if we look here on Monday, this was a sell that I got into. As you can see, the same thing happened to in the overnight session. We're just generating liquidity on the way lower. Look at all this low resistance liquidity. We don't have any lows that we're engaging here. I mean, we kind of have one here, but in general, this is just low resistance liquidity. So then we have London low here, and then I'm pretty sure this is previous day low. I think it might be Asia low. Yeah, that's Asia low actually. So we have, or no, that's previous day low here. And then we come up, we have a smart money reversal, SMT. Then we take internal range liquidity. Then we have displacement lower, come back into the breaker, come back into the fair value gap to then head off to sell to that low. Other than that, I don't know. Was there this was the only other long I really liked. But basically, swept internal, then we get displacement higher. We have a breaker here. Ideally, if I'm going to long this, I would like to see a breaker entry. We never got that offered. We had a breaker for value gap lined up, but we end up respecting this volume imbalance, then taking up to buy side. I think, yeah, this is the entry just on NQ now. So we have that breaker, then fair value gap. The breaker fair value gap gets, this is nice. This also is consequent encroachment of this new week opening gap. We now have relative equal highs, or we have equal highs here. Come back, breaker fair value gap. Price gets respected, and we end up getting up to buy side. Other than that, I didn't really see a short entry or short model. And then we end up selling off for the rest of the day. Market maker sell model that day. That was external range to internal range. And then let's go over Tuesday. Tuesday, there was a very nice long in the morning. I ended up taking, and it was very nice in my opinion. We have original consolidation. We have low resistance liquidity on the way lower. Then we get that reversal confirmed with a smart money reversal, SMT, to then have change in state of delivery on the 1 minute, to then have a 5 minute fair value gap. Then we have this old selling. If you draw that in time, this is an old selling. Then we come back into this order block, respect the order block perfectly, to then get bought up. The times or entries that are okay to take in, actually this was discount, but this was a nice. We also had other confluences. So that was the A plus on Tuesday, I believe, or Wednesday, yeah. And then I didn't really see much other opportunity that day, but yeah, and we had another nice setup Wednesday, or what's that, Tuesday? That was Tuesday. Oh yeah, this was Wednesday. This was pre-market. Yeah, this was pre-market. I'm pretty sure. Wait, Wednesday? Yeah, Wednesday. And then this ended up being the shorting opportunity that I took Wednesday. Yeah, I believe. I don't know. So we then have smart money reversal in an area in which we expect to reject this. The higher time for PD array. We're going from internal range liquidity up here to external range liquidity down here to then have that change in state delivery. This breaker now gets activated. It's on the 1 minute. If you draw this breaker out in time, where do we respect that breaker perfectly? Also this order block, that could have been the low risk entry to then have first stage, to then probably have second stage somewhere along there. Let's look at Thursday. Thursday's PA I didn't like as much, but this was the only really trade I liked. There was a shorting opportunity at the morning to where we had a SMT and then we just end up selling off at open. But I'm not the type of guy to put on a trade at market open because I'm just going to let market open play out. But then we end up having this original consolidation. Does that look familiar? Original consolidation to then have that smart money reversal, SMT to really confirm that reversal, to then have change in state of delivery on the 1 minute here, to then return to this order block. That would have been your best entry. I wasn't able to capitalize off that. But SMTs, y'all. SMTs, if we don't have an SMT, we're likely not going to reverse. SMTs just make the probability of us reversing a lot more likely. Like, I'm always looking for SMTs, but only look for those higher time for SMTs. I had a minute 5 2022 on Monday and a minute 15 sell on Thursday. Nice. Yeah, this week I feel like I traded decently. I think it was like break even actually. But next week I don't know, because we have completed this market maker sell model. I'm anticipating a return up into these fair value gaps here. But also we could still be bearish. There are like some war tensions going on, but I'm not really gonna expect it too much. Let's look and check on the dollar. On the dollar, I'm still bullish. I'm still bullish on dollar, which means bearish on NQ and YM, or NQ and ES, not YM. Why did I even say YM? But basically, we come back down in this daily fair value gap. We have rebalanced this daily fair value gap. We still do have a little bit of it that we haven't repriced to. So we could see something like this to where we actually come down back, because like we barely tapped it, to where we can come back, take this low to then head higher. But right now, this clearly looks like buy side of the curve right now. Bullish on dollar. If we look at internal structure, this actually does look bearish structure, internal liquidity. So we internally, we have rejected off of this it's a 1 hour fair value gap. 1 hour fair value gap, we have taken highs here, displaced lower. I'm expecting this low to be the draw internally on dollar. So that would support me having a short-term bullish bias on NQ and ES a lot better. Does DXY affect NQ? Yes, it does. I would say I don't look at DXY too much, but DXY moves the opposite of NQ and ES. So if NQ is going higher, if NQ is going higher, we would expect DXY to go lower. They're inversely correlated. Weekly BISI on DXY. Yeah, we now have this weekly BISI. I'm not gonna BISI doesn't really click in my head. I don't really use BISI too much. So like if you say BISI, it took me a second. Yeah, we have this weekly imbalance. Now I'm expecting the draw to be this low for this next week to then resume at higher prices. But basically, right now, this is bullish to where if we get expansions higher, I wouldn't be surprised. But we're now starting to notice on the daily on DXY how we're starting to kind of starting to shop here. So just by looking at this, we're accumulating to then have a manipulation to then have another distribution leg. Let's see if I can find another example. Like notice here, we're still bullish. We're starting to slow down a little bit to then we have manipulation to then have distribution. Also here, starting to stall, kind of manipulation distribution. Not the cleanest though here. Is there anything else you guys want to look at? Gold. I don't really want to look at gold, honestly. Let's look at YM. Let's just analyze YM just to see. So if we look at YM, this candle looks very bullish. This looks very bullish, in my opinion. We have now taken sell side liquidity on this daily time frame. We now completed sell side of this curve. We have a daily fair value gap here. This is probably a weekly fair value gap as well. Yeah, we're coming back down into this weekly fair value gap. This could possibly be the higher time material soup on Dow. Look at this wick on the daily. Notice how this is like a sweep of this low. This isn't like a we kind of pierce it and then close like down here. No, we have swept this low here. I'm expecting internal range liquidity. We don't really have a daily fair value gap. I would expect to see this 4 hour fair value gap on YM. So I'm bullish on YM. I want this to be the draw now. We now have relative equal highs here within that daily 4 hour fair value gap. So that's what I'm looking at for YM, and that's what I can see play out on YM. Other than that, this week was pretty decent. I feel like the morning sessions, like those 950 macro has really been the best and greatest opportunity. Other than that, I don't have anything else. I'm gonna be bullish this week and anticipate. Just know that we have been bearish and we now have displacement lower to where, yeah, we can just continue to go lower, but I'm expecting to see some form of retracement. Anytime we just have a quick sell-off, we're expecting to rebalance at least a little bit. But I'm not going to come in the market. I'm not just going to full on expect to see this. I'm going to see the market play out and then see what we can see from that, you know? But yeah, I don't have anything else. I'll see you guys tomorrow for the live trading session. And I apologize, this weekend, I've just been a little kind of like, not I want to say like out of it, but I would say like I was a little bit less. But I'm excited to get back to Monday, get back into the groove of things, get back on the grind. But